Before we start the podcast, I just wanted to say a quick thank you to our sponsor, Money Farm. Now, Money Farm are the leading online wealth manager in Europe, also known as a robo-advisor. Now, Money Farm have managed to combine extremely low charges while outperforming their peers. Now, you could read a full review of Money Farm on moneytothemasses.com. Just search for Money Farm review. But not only that, podcast listeners can take advantage of a special offer where Money Farm will manage the first £20,000 of their investment for free for a year if they enter the code MTTM20K when they sign up at moneyfarm.com.
Hello and welcome to episode 153 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leakes. Damien, welcome back. How are you doing on this exciting Friday evening? I say exciting because we've just had Halloween and there's lots of bangs and whooshes going on outside. Fireworks are plenty.
Yeah, so if you're listening to the podcast this week, you're probably going to hear quite a lot of fireworks. It sounds like a war zone outside of my house. So if you do, then it's just think of it as it's just a bit of background,
a bit of a backing track to what is going to be a hugely exciting week, I'm sure, that we're going to talk about because there's been lots going on in the news. Before we go on to the finance stuff, I'm not sure whether I should be asking you this question after one of our recent reviews, but I'm going to do it anyway.
Yeah.
How was your week?
Yeah, somebody said they didn't like the fact that me and Andy ask each other what we've been up to. Well, I don't really care, to be honest, because we're going to do it anyway. I mean, particularly this week,
that particular reviewer said skip forward the first 12 minutes. So if that reviewer is listening, they won't be listening to this bit anyway, so it doesn't matter.
I'm going to have to say that this week was absolutely incredible because, as people know, I'm a massive Spurs fan and I go to all the home games. And, of course, it was one of the most historic matches. I've had a season ticket at Tottenham for nearly 17, 18 years. And it probably was the best game I've ever been to when Tottenham beat Real Madrid 3-1. And if you're not into football, then they are the back-to-back European champions, haven't lost a game in Europe effectively for the group stages for about 5 years. So it's a massive feat for a club like Tottenham. And to see nearly 90,000 fans at Wembley, where we're temporarily resident, was incredible. But so it was a really good week. And of course, on top of all that, there was obviously Halloween and bits and pieces, all good fun. But it's been an exciting week in the money world, which we're going to come on to. But Andy, how was your week?
Literally nothing to really talk about. We've had Halloween. We've got an exciting weekend planned with lots of fireworks and stuff for the children. Obviously, stay safe, people. But yeah, it's been all right, you know.
I mean, just before I came onto this podcast, just quick, I had my daughter who's 7, and I said to her, you can stay up. Because where we are, and we have a loft room, and we can see out across the town where I am, or sort of southeast London. And there's a massive fireworks display that happens about a mile away from my house. And we can see it for free, so that probably makes me tight. I think I probably said it last year. We do it almost on an annual basis. So
it's a lovely money-saving tip, and that's, we're giving the listeners everything this week. Good. So talking about money saving, we're talking about the money now. What have we got coming up on this week's pod?
I mean, this week was a really exciting week in the world of money. There were some big stories. I just can't get it all in, to be honest with you. So there are two main pieces. Of course, there was an interest rate rise by the Bank of England. So we've got to talk about that. There's no way we can't, because it was probably one of the biggest headlines in the UK to do with money. The other is Bitcoin. I've been asked lots about Bitcoin, because if you're not into what Bitcoin is, most people don't even really understand what Bitcoin is, then you've probably seen that the price has been going through the roof, and it's pretty much almost nigh on vertical. So I'm going to talk about it briefly, because we've had a number of people who've written in and said, Damien, have you ever done anything on cryptocurrencies and Bitcoin? And please, can you do it? So I'm going to do it today. And the last thing is a really great idea for Christmas, actually, but relating to money, called a reverse advent calendar. So it's something that would be fantastic. I think everybody should try and do, or certainly encourage their kids or their schools to get involved in, because it's a nice twist on the advent calendar theme. So which should we kick off with, Andy? You choose.
Do you know what? I think a lot of listeners will be tuning in this week to hear your take on the rate rise. It's been a long time in the coming, and you're the expert. You've been writing about it and talking about it for the last 2 or 3 years, and I want to hear your take now it's finally arrived. So let's do it. Interest rate rise. What's happened? And Damien, shoot.
Right. What happened is we had the first interest rate rise from the Bank of England in a decade. Now, that is quite an incredible statistic in itself. But what happened is that the Bank of England nudged rates from 0.25% back to 0.5%. And, of course, if you'd read the national press and watched the headlines, the world almost was about to end because of that. But this was something that's been in the pipeline for ages. And in fact, if you Google anything to do with interest rates rising and sort of predictions and talking about what the market is pricing in, you'll probably find an article by me that we update regularly on Money to the Masses about the latest interest rate rises. And so I've been writing about this for forever, it feels like, and then suddenly they're about to raise rates and then they pull back, or they cut them like they did last year. But amongst all that, we just need to cut through the noise a bit, because yes, the rate rise was pretty much, we were given a lot of hints that it was coming by Mark Carney, who's the governor of the Bank of England. And when the committee all sat around and made that decision, it was voted 7-2, because a 9-person committee, and 7 of them said let's raise rates and 2 of them said no, let's not. And that's obviously, it's a majority vote, so the rate rise happened. But with all these headlines that are saying that millions of homeowners are going to struggle and almost lose their homes, it's just worth pointing out to people that the rate has only gone back to where it was in July last year, because after Brexit and the vote, they cut the base rate from the emergency level of 0.5 down to 0.25, and we've gone back to that. So if you want to know what it means to you, then you've just got to go back and look at your mortgage statement, assuming you weren't on a fixed mortgage, or you didn't actually have one mortgage at that time. But for most people, you go back and look at your bank statement in July 2016, you'll know exactly how much your mortgage is about to jump up if it tracks the base rate in any way, or you're on a variable rate. So if you can't, I made a video the other day, just a very brief 60-second one, and I made the joke in there that if you can't remember what was happening in 2016 in July in particular, then you've probably got bigger concerns than interest rate rises. So I think that people shouldn't panic about it, and the real takeaway from it is that, I will give people some figures. If typically that this rate rise, for people who don't know, it's probably going to add £12 a month to the average mortgage of around £100,000. So for every £100,000 you're borrowing over a typical term of about sort of 25 years, you're looking at your mortgage going up by £12 a month, and that's £148 a year. So obviously, if you've got 200 grand, roughly double that, it's a good enough approximation. Now, I suppose the next question is, are they going to raise rates again soon? And what came out of the press conferences they do after these rate rises is they chatter about, try and set expectations, not give too much away, but try and calm people down. They get a little bit excited about rates going up. And the general tone is what they call dovish, which means that it's hawkish and dovish. And if you're dovish, that means you are doing something that's very peaceful and very sort of slow. You're not going to raise them very quickly. Hawkish is obviously the opposite. And there were headlines around the term one and done, to say, oh yeah, that's it, they've gone up slightly and they're not going to do any more. If you looked at the forecasting from the Bank of England, realistically they reckon it's sort of pricing in, or almost assuming there could be 2 more rate rises in the next 3 years. It doesn't say how much that will be, but it's only likely to be very incremental. So rates aren't going anywhere, and I said on Twitter at the time that we're all getting a bit carried away with it, and all it's like is that we've gone from 0.25 to 0.5. It's still emergency stuff, so low, historic averages. When the last rate rise happened, in fact, it was up to, I think, something like 5.75%. So that was 10 years ago. It shows you that's more heading towards normality. So where we are is that we've just gone, it's a bit like somebody taking their foot off the clutch and putting the car back into first gear after putting their foot on the clutch last year when they cut rates. And you almost get under the impression that we're doing a Nigel Mansell style Formula One start and about to really take off. It's not. We're just really just getting started. But what people just need to focus on is that it confirms the direction of travel now is very distinctly upwards. So we are going to start going up. And if you are thinking about fixing your interest rate, then you should do so now, or think about doing now. Speak to a mortgage advisor. If you don't have one, then you can search via Money to the Masses, and we have links that you can go through and find someone locally that's been vetted and actually rated by other people. And it's really a very good wake-up call for everybody that, yes, they will raise rates eventually, and we need to start thinking about it. So that's the biggest takeaway from the whole thing. And for people who are savers and who are hoping, yay, we're going to get our interest rates being pushed up, I think even Mark Carney was realistic when he said that they should be passing on the rate rise. I mean, it's hardly anything, but the fact he says should and not will is probably an indication that they can't actually make the banks pass on the rate increase. I mean, they all cut their savings rates when the Bank of England cut the base rate, but they don't tend to work in the opposite direction. And just to show you how skewed this all is, I never hear from my mortgage lender, quite understandably. Why would I? And within 4 hours of that rate decision, I had a text message from my lender. I didn't even know that my lender had my mobile number, and a text message saying there's been a rate rise and we'll be in touch to let you know if it affects you. And it was almost like there was
the finger on the trigger.
Yeah, only because they're gonna basically profit, or at least try and get back to the realms where they get more money out of people if rates go up. So it just shows you this skew and how keen the institutions are to pass on rate rises when it suits them, but then they won't necessarily pass them on or whatever when it doesn't. So if you're a saver, then I wouldn't hold your breath that anything magic is about to happen, and rates aren't going to necessarily go through the roof, although this is all subject to change, of course, because it depends on lots of things.
It's interesting when you say about savers, because when I just happened to Google interest rate rise, just those 3 words, interest rate rise, and of the first sort of 20 articles, about 7 or 8 of them are articles that have been written by the mainstream press saying interest rates have risen, why haven't my savings rates increased, and all that kind of tone. So obviously they're getting ahead of the game because they know that people are going to be interested about the flip side of the rates going up. And I have to say, I'm very pleased to say, Damien, you're on the second page of Google, which is hugely impressive when you Google those 3 words, and you're ahead of people like ITV News, BBC, you're ahead of the Times, and that's really power to you and what you do and the influence that you have in the industry and everything else.
But funny you say that, Andy, and it's not me blowing my own trumpet, but just so people, if you Google this sort of stuff, if you say like when will interest rates go up, I think we're number 2 on Google, ahead of the mainstream press. I think if you say write things around how to remortgage or whether you should, I think we are on a lot of search terms number 1 in the whole of that, which is over, I don't know how many tens of millions of results. It's good to spend a lot of time talking and analysing it and giving people lots and lots of information so they can think about these things. So however you do it, then it's just a reminder for people to engage with the idea that rates will go up. Before we move on, Andy, I just wanted to quickly mention 80/20 Investor. Now, 80/20 Investor is my DIY investment service. Do go and check it out. I empower and teach people how to invest their own money. The service provides data-driven fund tables. The data is driven by my own unique 80/20 Investor algorithm, which I created. You also get stop-loss alerts, you get research articles and insights, you get market commentaries, monthly commentaries, and DIY investment lessons, but you also get access to my £50,000 portfolio, which is a portfolio of my own money, which I run live on the site for members to see, and it shows people how I use the service to maximise my returns. And in the first 2 years of doing so, I turned £50,000 into £59,500, which is a 19% return, beating investment managers, professional fund managers, financial advisors, investment banks, passive trackers in the market. So everybody can have a free 30-day trial of 80/20 Investor, and you can claim that by going to moneytothemasses.com and going and clicking on the 80/20 Investor hyperlink at the top of the page. So go and try the service, let me know what you think of it, and I know from the feedback that you're going to love it. But for now, on with the show.
Okay, so Damien, Bitcoin, there's been lots in the news this week, the cryptocurrency. Everyone seems to be using that phrase and think they know what they're talking about, but actually they don't seem to know what it is. But you're going to tell me what it is. What's going on with Bitcoin?
Bitcoin is it's a digital currency, and it's fascinating because it's the amount of headlines and people, like you say, seem to be talking about it. I almost lost count of the number of people who have asked me. I'm talking about general public, financial journalists in the national press, wanting quotes and what I think about Bitcoin. And part of the reason is because of this stratospheric rise. It's almost insane, the rise of the value of Bitcoin. And before I go on to explain what it is and give people a bit more of a background as to what it is, they can actually even understand it in layman's terms. The price of Bitcoin, so think of it like a currency, has gone up over 1,000% in 18 months. So that shows you the scale of the increase. And now, of course, you've heard stories of people who had Bitcoins when they were first made about 7 years plus ago, whenever it was, that they had it on their computer and it's now worth millions and stuff like that. Now, Bitcoin is, to go back a whole step, Bitcoin is effectively code. It's an online currency, a digital currency, or called a cryptocurrency. And Bitcoin is one of many cryptocurrencies. It's not the only one, it's just the most well known. And what happens is that Bitcoin is decentralized. No one runs it. It's not run by government. If you think about the pound or the dollar, they have central banks and typically governments that somehow are behind them and that control the interest rates and levels. So with Bitcoin, there's none of that. What actually happened was a computer programmer who created it, a rather mysterious character that nobody now really knows who he is. He almost disappeared, a bit Lord Lucan style. And he created Bitcoin, and it then was something that was taken up on by probably enthusiasts, because one of the things about Bitcoin is it's very good at being used as an online payment and transfer of assets, because it's decentralized, but it has something called the blockchain that's behind it. Now, if you buy shares and things in the UK, there's effectively like a ledger that says who owns what. Now, part of the Bitcoin is this online ledger called blockchain, and it's a method that they use to assign who owns different Bitcoins and when transactions go through, which is very obviously useful. The reason that the technology behind Bitcoin is in some ways more interesting than the currency itself is because there is likely to be mainstream use of that, because it could mean that we could use this system, which basically assigns blocks of code effectively, registering who owns different things, in this case Bitcoins, but could be used for other assets, which means you could probably buy and sell things in the future and the ownership transfers immediately and is irrevocable. It can't be changed, so it's actually in that way secure. So there are lots of institutions, financial mainstream institutions, that are investing in the idea, developing it and stuff like that. So park that to one side. That's quite interesting about Bitcoin. But what happened is that Bitcoin is different to main currencies because there's only ever going to be a fixed number of them, and there is apparently going to be up to 21 million Bitcoins. And the way they come about is they're mined by effectively solving complex, almost puzzles, using supercomputers. So not anyone can do it, and then you can actually create a Bitcoin by doing it. And so the guy who programmed it used this clever way of ensuring there never be too many. So they don't quite have the inflation angle that other currencies can have, where you can produce different amounts of them, etc., like we have with quantitative easing. So it makes Bitcoin a bit different to anything else that's out there. Now, of course, what's happened is that the people are getting kind of caught up in the bit like a tech bubble view of Bitcoin, and they're seeing it as the next great thing. The whole world will be on it. The fact that it's anonymous is wonderful. The fact that it can be, obviously it's online, governments can't control it. It's got a lot of attractions for people who inhabit the internet. But of course, there is no regulation. It's one of the key things for people out there. I must say, the reason that people might think, God, he knows a lot about Bitcoin, he's never talked about it before. What actually happened is this week, I've done a whole piece for 80/20 investors called Bitcoin Bubble or Bust. And it was all around the fact that should you invest in Bitcoin. And so if you want to know the ins and outs, I give a balanced view. I don't just sit there and take one view. I give a balanced view of the sort of pros and cons of this stuff. And you can get a free trial on 80/20 Investor if you go to the Money to the Masses website, and it's 30 days. I have no qualms if you cancel after that if you want to read the full analysis, because I talk about prices and all sorts in there.
Quick one for you, Jane, before you move on. Do you hold any Bitcoins? I'm assuming possibly that you don't. Or do you know anyone that does?
I don't hold Bitcoin, and I don't know anybody who does, but you always seem to be, anecdotally, you hear of people who've had them.
It's a bit like a fisherman's tale, though, or when you hear about gambling stories, you always hear about this person who caught a fish this big, or the guy who won £100,000 betting on his favourite football team. You hear about it, but how true that is, I don't know. So maybe this is similar with Bitcoin.
Yeah, it could well be. And the thing is that the Bitcoin is unregulated because there's no government in control, and that leaves it open to exploitation and fraudsters. And it's a bit of a wild west out there, and you hear words like dark web bandied around because, let's be honest, if you're a money launderer, there is a currency of sorts out there, Bitcoin, where no one can control it. There is no one, it's anonymous, and transactions can happen very quickly. Now, a lot of that's going on with Bitcoin because what's happened is that there's suddenly become a real surge in interest. But I want to give you just an idea of how crazy the price movements are. I said 1,000%, which if you'd heard that, you should be thinking, wow, given that equities might go up 5 to 7% in a year on average, if you're lucky. And I was writing an article about the possible places where Bitcoin could get to, and at that point it's about $5,500 per Bitcoin. And by the time we're talking now, I was saying about prices that were therefore 20-30% above where they were at that point. In less than not even days, we've gone over $7,000 for a Bitcoin. You can't keep up with the stuff. It's just taken off. So everyone it feels like wants to get on this bandwagon. And so the problem is that it's got the hallmarks of an investment bubble. And you've heard lots of different bubbles in the past. There was a tulip one. Historically, there was the South Sea Company shares that Newton got involved in, the genius that he was, and he lost a lot of money on it. So it's got all the hallmarks where people are flying into this stuff. It's not actually mainstream. It's one of the things that people are saying is a sign that it isn't quite in a bubble because not everybody's doing it. Because the thing is, it's not easy to buy Bitcoin. There aren't really any trackers out there. There's one that Hargreaves does, but it's not a true tracker. It's very difficult to go and buy them. You have to go and have this online wallet, etc., etc. It's very cumbersome. So the man down the pub might be talking about it, but he's very unlikely he's actually going to buy one. But like I say, it's got all the hallmarks of what a bubble is. So if you want to know more about the whole cryptocurrency thing and Bitcoin and what I think is a balanced point of view, then do have a read that article on 80/20 Investor. But to sum up, I'd have to say, would I invest in Bitcoin? And the answer is no. I'm not saying that Bitcoin price can't go higher than it is now, but the price rise is unsustainable even if we aren't in a bubble. I mean, to have things like going up 20-30% in a day, a lot of the characteristics of Bitcoin actually make it unusable as a currency. How could you use it to buy anything if within a day the price has changed 20%? You try to buy a car with Bitcoin, the value of that Bitcoin will have gone, you agree a price, it's suddenly rocketed or dropped within a day. That you can't have a currency that does that. So it would actually undermine its mainstream use in the end to come away from mainly enthusiasts. And the institutions out there, they're shying away from it. They don't want to get involved, and so are governments. And there's a likelihood that governments, they have banned it in the past. China banned the use of Bitcoin. And I think some of that might reverse, but there's a lot of exposure that you've got to legislation and governments coming in and just sort of destroying Bitcoin if they wanted to by not letting it being used. And of course, the other fundamental thing that I've not said is because it's an online entity, purely online, and it's operating in a slightly murky world of no regulation, and transactions are irreversible. It's a quirk of Bitcoin that if I give you some money, you can refund me in the real world. Bitcoin, it doesn't happen. It's like a one-way street, and so it makes it very attractive to hackers. And there was a famous case that an exchange got shut down a few years ago in 2014 when I think it was about $400 million worth went missing. And it was never said it was definitely a hack. They didn't really know where it went. But it is a very useful or attractive thing to try and hack and steal from people. And do you remember the NHS, that bug that went and closed all the computer systems around the world, locked them, and people had to pay ransom, that sort of ransomware, and it shut down NHS computers. They were being paid in bitcoins because it's actually makes it very difficult to trace what they're doing. So for me, overall, there's far too much that points towards it being a bubble. I'm not really interested. I'm not into trading currencies, and this is a currency, so it operates in a very volatile way. But you think about putting that on rocket fuel, you're getting something towards what Bitcoin's doing. I would, if my family and that were trying to get into it, I'd just be like, no, I think they need to sort of think about it and go do something else, to be quite frank with you. So, yeah, other people, I won't sort of have a pop at anyone who wants to do it. It's up to them. But you also have to ask yourself, why would you do that asset? There's probably loads of assets in the world that have some crazy price moves that you're not interested in. And I think the media obviously talk about it, but they have to take a bit of responsibility that they're talking up this almost you cannot lose the amount of money people are making. And I think they're not giving it the context that it needs, because a lot of the moves do follow the sort of supply and demand moves like equity markets, but they're happening at such a quick pace that you can't keep up. So, therefore, we talk about equity markets, what the next leg up might be, and support levels and resistance levels, and that could happen over years. We're starting to see that happen in Bitcoin in days and hours.
Yeah, wow.
And that is the sort of thing where it's too quick to really be able to do anything with. And so I'm quite happy to sit on my hands and be proved wrong and not lose all my money, because I can't afford to do that. So yeah, that's Bitcoin, and I hope that is enlightened people as to what it is and what other currencies, cryptocurrencies can do and what they're out there. And I'll quickly touch upon this before I do the final piece on the podcast. It's even got to a level now where there are companies, startup tech companies, that know that people are so interested in cryptocurrencies and Bitcoins that they're creating their own versions, their own cryptocurrencies that people can use to help raise funds for them. So it's like, think like an IPO on a tech company that could blow up and you lose money. If you chuck in the cryptocurrency angle to it, what could possibly go wrong? And it's kind of madness, but that's where we are. And good luck to people who want to do it, but it's not for me.
A company that's a startup that's trying to raise its own finances by printing its own money at the same time and saying, please invest. It's interesting. My only exposure to Bitcoin, and it's quite interesting, there's an Australian podcast called Hamish and Andy, and these two guys, they're sort of comedians of sorts, and one of them bought a couple of Bitcoins about 2 years ago, and they've seen the rise, and one of them said to the other one how stupid investment it was, and obviously with what's happened with Bitcoin, they decided to trade it in as part of the show. And one of the flaws of Bitcoin, if you like, is the fact that it is a one-time deal, and when they signed up for Bitcoin in their online wallet, they ask you to put in a password, and it's not like anything else that you see nowadays where you can put in a memorable word and a key phrase and, just email us if you've forgotten your password. There's no kind of backup to this thing. It's a one-time deal. It asks you it once and it will never ask you again, and there's no backup. So they've forgotten their password and they've got thousands and thousands of dollars locked up, and they've been going for weeks to try and remember this password. They've brought in hypnotists. They've gone through the rubbish and they've gone through previous shows, and it's quite funny really following the story. But yeah, it's one of the dangers that if you do look into Bitcoin and you do put that password in, keep it somewhere safe, because no one's going to help you out with it.
Yeah, I mean, it's such a fascinating story. In a week, we've had lots of equity markets have gone through the roof again this week, and everything seems to be going up. But what's also interesting is you could, if you wanted to get exposure to things like Bitcoin, you could invest in companies that are developing some of the technology behind those things, like I mentioned, blockchain. But as a final thought, I know I already said it was final, but it's just interesting widely. If you think you're going to be completely isolated from Bitcoin if it really keeps going and going, because they've actually got to the size of the equivalent size of Apple. They are enormous. The Bitcoin market now is enormous. It is becoming massive, and if it crashed and there was lots of people who got sucked in and all that money disappeared and whatever have you, then there are a lot of companies that are benefiting from Bitcoin, either deliberately because they're trying to invest in blockchain and stuff like that, then they will all collapse. There are financial institutions, therefore, who by a knock-on effect, you imagine like a domino effect, it could start to have a sort of a ripple through. And there are even companies out there who benefit from selling supercomputers to people who are trying to mine this stuff. And so it is something that it operates in a kind of niche world, but there could be some feedback into the mainstream stuff, and it's just how that becomes entwined anyway. So that's it for Bitcoin.
Good. What have we got on the last piece of the show?
The last piece is just a quick thought. It's an idea that I love that is to do with helping people, and it's called the reverse advent calendar. And it's not a new idea. I've seen it a year or two ago in other places, but there are a bunch of people who are called the UK money bloggers, who I did mention in a previous podcast of some people who are running money blogs, a lot of them to do with like saving money and thriftiness. And they have, as a band of like minds, and I sometimes go along to some of the stuff they do and talk to them because they're a great bunch of people, and they are doing or promoting this idea and encouraging people to try and do a reverse advent calendar. And if you imagine, Andy, when you were a kid and you used to get your advent calendar and you opened up the numbers and get your chocolate out and all that kind of stuff, it just feels like that's what Christmas is all about, isn't it?
Yeah.
And the idea of a reverse advent calendar is it's about getting a box, and every day you put a piece of food in there that when you get to the end of the advent calendar that you give to the food bank. So every day for 24 days you put an item of food that your local food bank wants. You can find that out by looking on their websites, and then at the end that box you take and give it to the local food bank. And of course you think there's 24 items in there, and if you got a whole bunch of people who did that, you could end up having tens and tens of thousands of extra food items being given to food banks. And I don't know if you've seen the news, Christmas is the time where they have a lot of demand for food banks, food usage. And the problem is they don't always have as much donation, because there's obviously a period where people are around and people are doing their own thing and festivities. So it's a wonderful idea, great for kids, great for anybody to do. And obviously Christmas is not just about taking, it's a nice idea to give something back. The only closing thought I would say on it, though, is of course it isn't much good giving people or trying to give a food bank food on Christmas Day, because it's not going to happen. And actually the demand is around the Christmas period, so they would like it way in advance. So we are at the beginning of November, and the UK money bloggers are encouraging people to do it in November, so for the next month, so they could perhaps give the local food bank the parcel at the start of December when there is that growing demand.
I think it's a fantastic idea. A couple of years ago I came up with the idea of doing something called 12 Days for Christmas, and it was 12 days starting at the 1st of December where you actually make some positive steps and changes in terms of changing your diets and your habits ready for the Christmas bulge. So the idea that it's not a charitable thing, but it's kind of a similar idea where you're sort of thinking ahead with Christmas and you actually lose a bit of weight, so that when you put weight on at Christmas, you're back to where you started. And I think this kind of thing is a sort of reverse thinking that I absolutely love, and it's inspired me actually to go ahead and do something similar. So I'm going to Google after this show where my local food bank is and get the children involved. Great idea, Damien.
And the other quick one before we go, in the last few years I have occasionally talked about Kraken cider, and that isn't my own habits. It's there was a charity. If you listen to the One Giant Leap podcast, there was a wonderful person who I interviewed, Scarlett, who worked in advertising and came up with this idea of a homeless charity called Kraken Cider, and it was based around the fact that she never gave money to a particular homeless man, and then ended up pondering why she didn't. Spoke to another homeless person, and they said people don't give us money because they think we're going to use it for Kraken cider. Cut a long story short, she worked in advertising and used her advertising genius and came up with the idea of a brand, Crack and Cider, on clothing that is donated to homeless people. So what happens, you go to their website, crackandzider.com, and you can pick coats and hats and gloves that therefore is bought and goes straight and to a homeless person on the streets of London or whichever city they're in at the moment. So I haven't spoken to her recently, but I'm hoping she's doing it again this year. It's still out there, and she's doing lots of talks and things. So have a look for that. If you want something a bit different, you can actually just go and buy a homeless person a coat, and it goes and they go and deliver it. So it's a wonderful idea. It's a very direct way of helping someone to keep warm in the winter. So you've got the food angle and you've got the warmth and clothing angle. And of course, one of the big things they did was female packs, because obviously homeless people and particularly women still have hygiene needs that are not met by other institutions, and people just overlook it, and you can give those packs as well. So do have a look for that. Go crackencider.com.
Brilliant. I think that's rounded it up lovely. Yeah, it's nice to have a little chat about the Christmas period coming up. It kind of reminds us that, goodness me, it's not that long away now, just over 6 weeks. So it all starts from now. Of course, if you want to get in touch with Damien, you can do so. Damien loves to hear your ideas, thoughts, feedback, questions. If your question is particularly relevant, it will get featured on the show. Damien likes to involve you, the listener. It's podcast@moneytothemasses.com if you've got a sort of lengthier question, or if you want something punchy, send it over in 170 characters or less, and it's @moneytothemasses with the number 2, and Damien will get straight back to you. Damien, anything else?
Twitter's 140 characters. No, that is it. And the reason I want you to do a review, we keep banging on. We want to crash through that 100 barrier. We're only a couple away. 100 reviews on iTunes. It looks nice if you have 100, because there aren't many shows that have 100 reviews and have a nice shiny 5-star rating. So let's do it, people. Help us out.
Great stuff. Until next week. Maybe that's why I never get a response on Twitter, because my last 30 characters are being missed off.
Don't forget to claim your free copy of Damien's best-selling book, The 30-Day Money Plan. Sort your finances in just 5 minutes a day, worth $4.99. Just go to moneytothemasses.com/podcast to find out how.